The identity and control and surveillance of centralized systems, whether that's money or speech or everything else, will trend worse over time. And the way we solve that is by building alternatives that don't have centralized control, that can't be corrupted by humans inherently.
What Bitcoin Did is brought to you by our lead sponsor and massive legend, Iron, the largest Nasdaq-listed Bitcoin miner using 100% renewable energy. Iron are not just powering the Bitcoin network, they also provide cutting-edge computing resources for AI, all backed by renewable energy. So whether you're interested in mining Bitcoin or harnessing AI compute power, Iron is setting the standard. Visit iron.com to learn more, which is IREN.com.
I fucked up. So a couple of days ago, I went out to record with Odell. It was a conversation I'd really been looking forward to. It's one of my favorite conversations that I've had on What Bitcoin Did so far. It was an absolute banger. But about an hour into the show, I realized that the audio had failed once we started recording, and it basically got nothing. So we didn't even have time to run it back because I had to rush off to get a flight as soon as we were finished. We've done everything we could to recover it from the video cameras. So we do have some audio. It's not as good as it should be, but the conversation makes up for it. It's totally worth it. So please bear with it. About an hour in, you'll see me realize that I fucked up. And from there on, it's fixed. But it is a decent chunk of the show that's going to sound a lot worse than normal, but the conversation makes up for it. So bear with us, and I'm very sorry.
Odell, how are you doing?
Always a pleasure to join you.
Thank you for having me here, man.
Yeah.
It's been we've spent like 20 hours together now and done everything that I wanted to do in the podcast just in private.
The lost tapes.
So I don't know what we're going to talk about. But I think the place I want to start is one of the big concerns that I have with Bitcoin is that I think since I got into Bitcoin, Bitcoin's changed a lot in terms of the way that people talk about Bitcoin. And it's gone from being like very much a freedom-focused thing to now being totally financialized. And do you think that we're going to risk losing something in Bitcoin? And do you think Bitcoin will actually use as freedom in the future?
It's a loaded question. Do you remember the rip we did with Peter in... We did a lot of rips.
Yeah, we did a lot. It would have been in Nashville probably.
And we talked about the capture of Bitcoin.
I remember
it actually aged really well. I think it was 21 or maybe 22.
Okay. I can't remember what you said in the show though.
And I think that's playing out. Basically what we're seeing happen is there's a scenario where Bitcoin is widely successful, whereas the reserve currency of the world is the base of a global decentralized financial system. But the overwhelming majority of usage of it is surveilled and controlled and captured.
Yes.
And you do it in kind of like frog boiling type of way, right? And we've seen it for years, every regulated Bitcoin exchange requires identification information. Every transaction is tracked, and every amount that you purchase is tied to your identity. And most people will likely use it in that way. Now, the key difference with Bitcoin versus traditional systems is you always have the ability to use it in a freedom-focused way. So what does success of Bitcoin as freedom money look like in a realistic sense? It's probably less than 5% of people are using it in a freedom-focused way.
But I think there's also a difference there where, even when, it's been a long time you can only really buy Bitcoin easily on KYC exchanges. But for a long time, that was something that everyone kind of pushed back, and people didn't like the fact they had to do it. They just kind of knew they had to do it. Whereas I feel like now people are cheering on this, incoming financialization of Bitcoin in a different way. They're embracing it way more.
I mean, I think it's a time thing, right? It becomes normalized, and then people start to just accept it as the status quo, right? I mean, we basically, if you look back, maybe it was 2015 for sure, even 2016, most didn't have ID requirements for most Bitcoin services and tools. Then within like 1 or 2 years, it became pretty much status quo. And then the normalization has gone into effect since then. So like 2017, you had pretty much every major on-ramp and off-ramp was requiring ID. And that was 8 years ago. So then 8 years go by. A lot of new entrants come in. They don't know anything other than that. And this is the result. But I think what's important to realize here is, yes, in absolute terms, there's probably more people that interact with Bitcoin that way. And definitely more people that interact with Bitcoin that way. But also, like in absolute terms, there's more people focused on using it as freedom money. Like the percentage of people that are using it as freedom money has fallen. But in terms of actual individuals, the absolute number of them has increased dramatically. Yeah, as more entrants enter the space, right?
But if you you think around 5% is kind of the number that we'll be looking at for people who actually use Bitcoin in a freedom money way. And is that success then?
I just want to say for the record, we were recording at my house here. Danny's a guest of my family. And so you might hear giggles from my son.
We've got awesome family noises going on.
Yeah, you might hear giggles from my son outside. I think he's mesmerized by the locked door with us on the other side. What was the question?
If you think the number's 5%.
Oh, I think 5% is like, could be overly optimistic.
But so is that success to Bitcoin, do you think?
I think Bitcoin will probably win. So that's my expectation. So I think the most productive way to go about it, if your goal is as many people using Bitcoin as freedom money as possible, is to understand the reality of the situation and try and get that number as high as possible. Mm-hmm. And I've thought about this a lot in that conversation with a lot of people. 5% might be overly optimistic. But whatever that number is, try and get it as high as possible. I want to be clear here that when I say that number, I'm talking about number of individuals. So one of the cool parts about Bitcoin is the supply distribution was incredibly fair and based on proof of work. Anyone who has Bitcoin today is put in work to obtain that Bitcoin, whether that was through energy expenditure through mining or through exchanging goods and services or currency for Bitcoin. But that supply distribution was very front loaded.
Yeah.
So if you do by percent of Bitcoin held, it'll be a significantly higher number in terms of being used as freedom money. Because there's a lot of people that have large stacks from the early days that use it in a freedom-oriented way. So maybe that number is like 40, 50%.
And that's promising because they're going to get incredibly wealthy. And where do they spend their money and what do they do to the world? Like, we've seen what impact Bitcoin can have in the real world, like very, very decently. I think I don't know if it's the only reason. It's definitely not the only reason, but it's a big reason that Trump is now the president. I think it's because of Bitcoin.
Maybe the first Bitcoin president.
Yeah. Is he a Bitcoin president?
Well, he's the first president that
said the word Bitcoin.
But he's definitely the first president that a active Bitcoin political lobby helped elect.
Yeah, that's for sure. I don't want to labor this point too much, but you said before Bitcoin will win.
Yeah.
I just want to know what you mean by win, because I assume what you're saying there is it becomes a reserve currency of the world.
Yeah, I think so.
That's winning.
I mean, it depends on your definition of winning. And I think there's a strong argument that you would want to. Winning is not just that. Winning would be that anyone could use it as freedom money if they wanted to.
Which we're probably already there at that.
I think so. I mean, I think it'll always be the less convenient option.
Yeah.
But if people actually have the need, it's easier than ever to use Bitcoin as freedom money.
Yes.
It hasn't gotten more difficult, even though the normalization has been surveilled and controlled Bitcoin.
Yeah.
if you are an average American, obviously the most convenient way to get Bitcoin probably is to just like open your brokerage account and get Bitcoin exposure because it's not even really Bitcoin and you know, buy an ETF. Right. But if you actually want to obtain Bitcoin and then use it without permission, it is less convenient than that, but it's more convenient than it was 2 years ago, 4 years ago, 6 years ago.
For sure.
And then you're seeing places, and I'm touching use America as an example because we're a relatively stable constitutional republic. But let's say I use the technical term. But if you look at other parts of the world, you look at places like Turkey or Venezuela or Argentina. I guess Argentina is doing better now, but Bolivia, Russia, like these places that don't have stable government or stable currency or stable financial systems, people are using it in way greater percentages as free money because they have no other option, right?
So I had a bit of a back and forth with Junset on the show that we just put out today, because he was saying Bitcoin's not done anything yet. And I think those examples, like basically everything Alex Garcia talked about, I think is an example of Bitcoin actually doing something.
Obviously I haven't listened to that episode yet because you released it this morning.
So he was basically saying it needs to do something at scale. So, like one of the examples I brought up in the show was when it helped the Belarusian protesters.
Right.
And he was like, no, it's not big enough. Like, did it help one person? Like, he was classic Junset.
Yeah.
But he was saying like, if Bitcoiners had like funded the Ukrainian war, then that would have been doing something. He thinks it needs to be at that kind of scale.
I mean, there were a lot of Bitcoin donations that funded the Ukrainian war.
There were.
And there were a lot of individual Ukrainians that relied on Bitcoin to get money out of the country or money into the country.
Yeah. I think that's just Junset being contrarian.
I mean, I think the scale naturally increases over time. Mm-hmm. I think another example was the Canadian truckers. Like, there was a lot of disappointment in terms of maybe its ineffectiveness or its lack of adoption, but some people did rely on it.
Yeah.
Right. And it's going to take. As Parker always says, it's going to be gradual and then suddenly.
Yeah. I think the suddenly part might be around the corner, I think.
We're on the tail end of gradual.
I think we're on the tail end of gradual.
I don't think suddenly has begun yet.
No, I agree with that. One thing that is interesting that we spoke about last night after a few beers, and I think you specifically said, let's not talk about this on the show, so I'm going to bring it up.
Great topic.
There
was a couple things. Which one we're going to bring up?
This one was about, so it kind of ties into you saying Bitcoin winning is becoming the global reserve currency. Do you think Bitcoin is going to beat gold?
So for years, what we heard in the Bitcoin community is, from shitcoiners and crypto people, is that Ethereum doesn't compete with Bitcoin. Ethereum offers something different. Solana offers something different. There's going to be like this diverse crypto ecosystem. And the Bitcoin response was always, these are competing monies. And it's going to be a winner takes most.
Yeah.
Right? Most of these things will never go completely to zero, but it's going to be a winner takes most because they're competing money. So at the end of the day, everything has competing opportunity costs, right? If you're holding Ethereum, you're not holding Bitcoin. If you're holding dollars, you're not holding Bitcoin. If you're holding Solana, you're not holding Bitcoin, and vice versa. And by that same logic, gold is a competing money. Gold is competing money, and US dollars are competing money. And US dollars as stablecoins, or I don't like calling them stablecoins, as USD tokens are competing money because they're inherently not stable. They're designed to trend to zero over time, and they rely on trusted third parties. So I think gold is the final boss, and gold is having its moment right now.
For sure.
And I think one will win, right? And gold has Lindy and has been around for thousands of years and used as a money for thousands of years and has a head start. But if you look historically at the gold Bitcoin ratio, Bitcoin has been absolutely crushing it over the last 15 years. I think that trend will continue. I think we're in a short-term dead cat bounce for gold. I think there's probably some poor schmucks out there that are rotating a portion of their Bitcoin stack into gold right now and panicking, and probably will be a horrible decision. But yeah, I mean, I think if you're thinking about Bitcoin as a reserve currency and Bitcoin as global base, like this base of a global financial system, you have to be thinking about it in comparison to gold. And that's basically the chart and ratio to watch right now. Because gold is having its moment. It's at all-time highs and keeps trending higher.
Yeah. I like the analogy that like gold runs first, but Bitcoin runs faster. But you were making the point to me last night that we've never seen gold do this before in our lifetime.
Yeah, I mean, my lifetime, this is a historical first, really.
Yeah.
Like everything down and gold up. Also, Bitcoin just hasn't been around long enough for real, I think, historical accuracy. I'm like, you can't really judge past behavior there. Do I think that might be the case? Well, first of all, gold is running. So if Bitcoin is going to run, it'll be running second.
Yeah.
But, yeah, I think, look, in times of chaos, or particularly uncertainty, right? Maybe chaos is too strong of a word. In times of uncertainty in the market, people go to what they know. And historically, that has been U.S. debt, treasuries. And there's concerns about the creditworthiness of America. So that hasn't been the case as much this time. And what else do they have? They have gold. So they go to gold. They know gold. You probably won't lose all your money if you convert your assets to gold because it has liquidity. And Bitcoin is new. It's the new kid on the block. Particularly if you look at large capital allocators, like people that control billions of dollars, hundreds of millions of dollars, Bitcoin is brand new to them. They basically have no exposure to Bitcoin as asset allocators. So it's going to take some time.
Yeah. It was super interesting to me seeing the treasury market not behave very well when like the tariffs came and everything went to shit. And the other thing that I find fascinating is that the kind of term sovereign debt crisis is now a term that everyone uses. Like in the last like 4 months.
What about fiat currency? Fiat currency when I first got into Bitcoin was like an edge thing that our niche online community talked about.
Yeah, when I went to Bitcoin, I just thought it was a car. Like I had no idea what this is.
Now people just nonchalant this. This is the normalization of new technology and new perspectives.
Yeah.
But yeah, I mean, I think we are seeing a global sovereign debt crisis. I think we have been seeing it for 5 years now, maybe more. And, those kind of status quo changing phenomenon take a while to
become like common parlance.
Yeah, for sure.
So if gold like defined the boss, obviously the US dollar is like under massive pressure.
Maybe they're equal final bosses.
Yeah, I don't know where that kind of fits, but it's under massive pressure. But like stablecoins kind of offer them a bit of a way out in some ways.
Yeah.
And when we were in DC a few weeks ago, Paolo was on with Jack.
Yeah.
And I like whenever people talk about the scale of stablecoins, it's always about like how many treasuries they're buying.
Right.
I'd never heard the metrics on how many people are onboarding, and it blew my mind. Like 250,000 people a day being onboarded.
There's a real demand. Yeah.
That's wild. But do you think there's a big threat there? I know you call it like the private bank digital currency. Like
private bank digital currency.
How big a threat do you think stablecoins actually kind of offer?
I think it's not a real threat to Bitcoin long term. It definitely slows down Bitcoin adoption. But I'm also a believer in free markets, right? So there's a real demand for dollars around the world. I did a trip to Argentina, see the country and the Bitcoin community down there. And one of the things we did was we went to the currency black market. So Argentina has a long history of just poorly run government currency.
Yeah.
And as a result, they have very established currency black markets. They're very sophisticated. And to the point where like it's almost not even a black market. It's just like how people interact with money. And you go to like this place and it's like in an office building, like it's not in the slum, it's in an office building. They like buzz you in. It's like very legit. They accept Bitcoin there. They don't accept Bitcoin on Lightning. They don't even know what Lightning is.
That's interesting.
But the number one exchange they do is Tether on Tron.
Yeah.
By far. It's like 99-1 when I was asking the brokers.
So,
By the way, though, to our earlier conversation about freedom money, they don't do any identification checks or anything like that, right?
he's saying Tron is freedom money.
No, but I'm saying for Bitcoin or like my point is if you are in a place that really needs access to censorship resistant or permissionless money, people find a way, people figure out a way. But yeah, the overwhelming majority was Tron and Tether. Now, what's the issues there? The first issue is obviously dollars are controlled by a centralized third party with the US government and the Federal Reserve. But then also you have Tether, who is a trusted third party. So you can get rugged by the US and you can get rugged by Tether. Now, there's a common misconception. You actually you're not really trusting Justin Sun and Tron. Because if something happens, Tron is incredibly centralized, but if Tron goes down, like Paolo and Tether will just like send out a tweet and be like, we took a snapshot and now use Solana.
Yeah.
Like you're trusting Tether is who you're trusting. But people demand dollars, they want dollars. And as a result, it's slowing down the adoption of Bitcoin because
That's their exit route rather than Bitcoin.
Yeah, they have a different option, right? But I think long term, like it can't compete with Bitcoin because first of all, the value is designed to go down because dollars are printed. And because you have trust in this third party, which is Tether, and Tether has frozen funds. They've blocked funds. And there's always the black swan risk that the whole thing just goes belly up, whether through malintent or government action or something like that. Mm-hmm. All Tether can just be wiped out and you can just lose access to all your money. Bitcoin fixes that. Bitcoin offers a superior alternative. It's going to take a while for people to realize that. Now, usually how they will unfortunately realize that is through painful lessons. And one example we saw in Argentina actually was we had Terra Luna, which was Luna was the shitcoin and Terra was the stablecoin.
The algorithmic stablecoin.
Stablecoin that was based on Luna. And that whole thing got rugged. And a lot of Argentinians got rugged in that situation. And they lost their life savings.
Yeah.
And at that point, they realized this is why Bitcoin exists. Right? So that's it. And the unfortunate reality is it's going to take time and that's going to happen. But it kind of is what it is. Like you don't really, and you see you see similarities in places like America, right? It's like, okay, so, like most people like keep their money in like Citibank or something. Well, it's, Citibank is effectively insolvent because of fractional reserve banking. And as long as that convenience is there, that people can relatively easily use a traditional financial system, they probably won't seek out an alternative.
This episode is brought to you by AnchorWatch. The thing that keeps me up at night is the idea of a critical error with my Bitcoin cold storage. This is where AnchorWatch comes in. With AnchorWatch, you're protected by their time-locked multi-sig vault and with your own A+ rated Lloyd's of London backed insurance policy. You get to hold your keys, AnchorWatch holds the risk. Whether you're worried about inheritance planning, wrench attacks, natural disasters, or your own mistakes, you're protected by AnchorWatch. Rates for fully insured custody start as low as 0.55% and are available for individual and commercial customers located in the US. Speak to AnchorWatch for a quote and for more details about your security options and coverage. Visit anchorwatch.com today, which is anchorwatch.com. This episode is brought to you by River, the best place for Bitcoiners and businesses to buy Bitcoin. With River, you can set up zero-fee recurring buys, making stacking sats effortless. And while you're waiting for the perfect buying opportunity, River lets you earn daily interest on your cash balance paid in Bitcoin, which outperforms most high-yield savings accounts. What really sets River apart is their unmatched dedication to security. You have peace of mind knowing that River has monthly proof of reserves and holds all Bitcoin in multi-sig cold storage. And with US-based phone support, you'll always have someone ready to help. To open an account, go to river.com/WBD and earn up to $100 in Bitcoin when you buy. That's river.com/WBD. I also want to give a quick shout out to the Human Rights Foundation's Financial Freedom Report. This is their weekly newsletter that drops every Thursday, and it covers how authoritarian regimes use money as a tool for control and how people are pushing back against that using privacy tools and, of course, Bitcoin. It's an amazing newsletter, it's pure signal, and you can subscribe for free at financialfreedomreport.org.
Yeah, I do want to talk about how Bitcoin may pose a threat for banks, but I want to come back to that because when you say that everyone's using Tether on Tron, like that's just like empirically true, you know that's fact. But they're now trying to put Tether on Lightning with Taproot assets.
Yeah.
Do you think they'll actually gain any traction doing that? And really, do you think it even matters what Tether is on because you're still just using Tether?
Well, let me so under the current administration, Tether season, the biggest threat that Tether has had for years has been the U.S. government.
Yeah.
Specifically U.S. government action. I always call it like cruise missile risk. Mm-hmm. It's a bit provocative, like it probably won't get hit by a cruise missile, but you get the idea, right? Like they get raided or put in jail or something like that. And now because the current administration is friendly towards Bitcoin and friendly towards the greater quote unquote crypto industry.
And Lutnick's there.
And Lutnick's there who, Cantor holds their treasuries for them. Tether sees an opportunity to solidify that relationship and take away that major risk. And so that's why Paolo is in the United States for the first time ever. That conversation we were talking about was the first time we ever saw him in the U.S. And he specifically said, I think I might misquote it slightly, but he's like, Tether is the front lines of expanding and strengthening the U.S. dollar hegemony. And so they've released a bunch of stats. So they have public stats now as part of this initiative. And just for people to understand the scale, current Tether in circulation is $144 billion. Okay, they estimate 400 million total estimated users. They're the 19th largest holder of U.S. treasuries, mostly competing with governments in that regard. They hold $113 billion in U.S. treasuries. Now they have a breakdown on the different chains they support because they support as many chains as possible. There's 73 billion on Ethereum, 67 billion on Tron, and then it drops off the cliff. After that, they support a bunch of other chains. It just drops off the cliff. The daily transfer volume is way higher on Tron. So $16 billion worth of Tether is transferred on Tron every day.
Just cheaper.
7 billion on Ethereum. Yeah, just wherever the cheapest, most centralized thing is where you're going to see the most transfers. So like the stats are staggering. Like there's clearly demand for it. Now Tether has desires to basically support as many ways of transferring Tether as possible, and one of them is Lightning. I do wonder, I kind of question if there's going to be real product market fit on that, unless something happens to Tron or Solana.
I mean, presumably it would be, I don't actually know how much it costs on a transaction on Tron, but I would imagine it'd be comparative, if not cheaper.
Tron has actually gone up in transaction fees as a result mostly of Tether adoption. Mm-hmm. Now, because it's centralized, they could reduce that. And maybe if there's real competition, they will reduce that. I've never actually used Tether on Tron or Tron at all. But my understanding is like in the $2 to $3 range.
Okay, so Lightning should be
yeah, but Lightning adds complexity.
Yeah.
It adds a level of complexity both on the wallet layer and on the user layer. It's a completely different flow than using on-chain, whether that's Bitcoin or Tron.
But I assume people that are using this wouldn't be using it like running their own Lightning node. They'd be using it through some centralized service.
So my point is there's network effect, right? There's already real.
They just don't have network already.
Yeah, like it's hard to break network effect, and I think specifically Tether on Lightning is an easy hype thing to sell to investors. And the real questionable, the real question that should be on investors' minds, is it just hype, or is there actually the possibility of product market fit there? Is there the possibility of real usage breaking that network effect? And if that does happen, how long does that take? And if by the time you even start to see any real breaks in that network effect, are people just going to be moving to Bitcoin at that point? Because if you actually see a global dollar crisis and lack of faith in the credit of the United States, there should be a movement towards Bitcoin and gold from dollar and dollar denominated things. So the question is, you're trying to break this network effect, but you need to break it quick enough that Bitcoin isn't breaking the network effect.
Yeah, that makes sense. As an investor, would you invest as a
No, we don't at all. At 1031, we attempt to any. We have, first of all, zero USD token plays, and specifically from an investor perspective, bearish on Tether on Lightning. I think it's, if it's successful, it's probably a net benefit for Bitcoin because people will be that much closer to using Bitcoin and it'll be easier to swap between the two. But from a practical point of view, I guess the one thing we've seen is, so Strike, which is our largest investment by far, is available in 101 countries. And in America, we have all the traditional financial rails, right? ACH, real-time payments, wires, everything that people in the West are used to. But abroad, people really want Tether support. And they didn't want Lightning on Tether support, so we added Tether on Tron support for that.
Yeah.
And the numbers don't lie. Like, the usage is massive. People wanted to get away from Binance, and Binance was the only way that they could interact with it. And it puts them one step away from Bitcoin without adopting a whole new technology stack for that usage. And for the end user, at the end of the day, for the end user, if what they want is to be able to deposit and withdraw Tether on Lightning at some point in the future, then Strike will add that. But I think we're pretty far away from that.
Yeah, I think getting as many people on something like Strike as possible makes total sense. And they're crushing Argentina, right?
Yeah. And it's been completely organic. There's been no marketing or anything. People just need it, so they figure it out.
One of the things that's interesting is if the stable coins, which I think I saw some news on this in the last couple of days, if they're able to pay the users a percentage of the interest they make, do you think that actually strengthens it and makes the US dollar token thing less likely to be broken by Bitcoin in the shorter term? Do you think kind of strengthens that network for a little longer?
Well, look, I think one of the beautiful scams of the US banking system is that banks have gotten away with underpaying interest to account holders.
Yeah.
Right? People see it all the time, right? Treasuries are at 4.5% or whatever, and the bank is giving you 1%.
Yeah.
Or less. Quote unquote high yield savings account, is 3%. Tether took that a whole nother level, and Tether pays no interest whatsoever. And that's why Tether's so profitable. Tether's on track right now to make $24 billion or something this year.
Yeah, it's wild. They need more money than BlackRock last year, with 100 employees.
And I'm pretty sure that doesn't even factor in growth potential.
Yeah.
And that's because
does that factor in their gains on their Bitcoin? Because they hold a lot of Bitcoin.
I don't think it factors in that either.
Crazy.
They have 100,000 Bitcoin too. And so that's because they're holding treasuries and they're not passing on that interest to users. So I think Tether has no incentive. They have the network effect. They're the overwhelming majority of the USD token market. They have zero need to do that because users are using it regardless. They just want access to dollars that they can send and receive relatively easily. So who will do it? We've seen challengers try and do it.
Yeah.
As an edge, right? It's if you use us, but
it's like Bitcoin. There's no second best in the stablecoin market.
It's just the network effect is too real. I think you don't have to be a Tether promoter to realize the reality on the ground, which is barring some, massive misstep or mistake by Tether or some kind of government action or something. no one's going to be able to compete with them.
I do think it's interesting the way that it does open a competition though. So like, I know you've said a few times you think Sabre might issue a stablecoin or something.
I think he will, yeah.
If he came out and was like sharing interest, so you're getting 2.5% interest or whatever it is, like that's a huge incentive to do that rather than Tether.
Yeah. So the reason I think people will continue to try to compete with Tether is because they're making so much money.
Yeah.
Right? So they see it, they're like, they do the common thing. They're like, if I can get 5% of the market, that's billions of dollars. And it doesn't even matter if a realistic analysis says that they probably can't actually compete. All that matters is that the person who's going to attempt to compete thinks they could compete. So I do think more likely than not, Saylor will be involved in some kind of stablecoin launch to try and capture some of that market.
Is this one of your predictions where you have inside knowledge?
No. It's just based on his public appearances and his public comments. But he has a whole digital asset framework, and he's talked about. He's actually been very deliberate and careful, but he's oftentimes mentioning how Tether is offshore, and we need a US bred and born suit one.
Yeah.
I think a lot of these guys realize that the best way for them to compete with Tether is unfairly, which is use the US government as a tool to hamper their growth.
But I think Tether is now part of the US government in a lot of ways.
Yeah, I mean, I think that window is probably closed, and I think Tether realizes that and is seizing the opportunity. But there's a reason why you see the Circles, the USDCs of the world. Their number one attempt to try and take down Tether has been not offering interest. It's been trying to get regulatory moats set up so that Tether can't compete with them.
Mm. So do you think, I mean, just real quick, I don't think someone in Argentina who's used to using a certain wallet that supports Tether is going to switch to a US suit-based one that offers them 1%.
I think the way they would do that is if Strike then offered both,
right,
and you had one that gave you 2.5% interest, that's an easy switch. But I agree that they're probably not going to download a new wallet and go through the rigmarole of figuring it out.
That's the network effect.
Yeah.
Network effect's a bitch to break.
Yeah, but it's interesting that maybe that network effect is actually on the Strike level rather than the stablecoin level.
I think specifically right now, it's mostly on. It's mostly on the specifically Tron and Tether level.
Yeah. Do you think, so you say the stablecoins potentially slow down Bitcoin adoption, which is seems obvious. Do you think, back to Saylor, that MicroStrategy does?
What?
Slow down Bitcoin adoption? In the sense of what we would consider real Bitcoin adoption, not showing a derivative.
Yeah, I think so. I mean, it's definitely not a competing money.
For sure.
I mean, you can look at it both ways, right? Because MicroStrategy is accelerating. First of all, strategy.
I can't believe
you gotta respect the name. You can't dead name, dead name strategy. Strategy is clear. They're doing a speculative attack on the dollar. They're taking out debt, and then they're buying Bitcoin with it. They're taking out debt on something that goes down over time.
Yeah,
the dollar, and then it's all denominated in dollars, and then they're buying Bitcoin with it. And then it's amplifying other companies to do the same thing, right? We're seeing a bunch of copycats and people trying to compete, many. And it's also providing cover for a lot of private companies that are doing the same but different kind of strategies. So in that way, it accelerates, at the very least, Bitcoin purchasing power, because there's less Bitcoin in supply. As that happens, you see scarcity kick in, and you see Bitcoin purchasing power increase, which helps everyone who holds Bitcoin, right? There's this weird phenomenon where, edgelord Bitcoiners are I don't want the Bitcoin price to go up. It's Bitcoin price, if you're a self-sovereign Bitcoiner and your family relies on Bitcoin, you want your purchasing power to go up, right? You want to be able to
buy more things with less Bitcoin over time.
But I do think it's like the people that don't want it to go up at the expense of everything.
Yeah, but there's two things here, right? So in that regard, maybe it's very helpful to Bitcoin. Where I think it's not helpful for is individuals that are coming into Bitcoin for the first time. Where they're going into the alternative, right? They're never making the leap into self-custody Bitcoin. They're never making the leap into learning how Bitcoin works and understanding the tools and trying to improve their skills. Instead, they're just aping into MicroStrategy or other stuff.
And that's happening so much. Like, there's obviously, like, Gladiator's huge on Twitter. You won't see him, will you? Because you're not on Twitter.
I'm aware of him.
And like,
I don't post on Twitter anymore, but I'm aware of what happens there.
Jeff Walton, and to be fair, Jeff, I think, probably does actually get Bitcoin. Like, he seems pretty switched on. But there's so many people now that are just either coming to Bitcoin through MicroStrategy or, like you say, just coming to MicroStrategy. And it's really strange that I don't feel like we've had a real influx of people coming just into Bitcoin.
There's been this cycle has been very little new retail that has come into real Bitcoin.
Why
actual Bitcoin? Because there's so I think it might have been Saif Ad-Din who popularized it among Bitcoiners, but like the marshmallow test. You know the marshmallow test?
I think I've heard. Is this like if you offer a kid one marshmallow?
I think Stanford did it. And it was like, if you give a kid a marshmallow and you put it in front of him and you say, if you wait 30 minutes, I'll give you 2 marshmallows, but you can't eat it. Many kids will just eat the first marshmallow, right? And it kind of embodies this idea of there's all these distractions around us and it's hard to focus on long-term thinking and long-term improvement. And today there's more distractions than ever entering Bitcoin. So people get, they get caught up in that, and instead they never actually learn how to use Bitcoin.
I think also there's 2 things to it where people think they missed the boat on Bitcoin, and I did when I got into Bitcoin, and they still think that MicroStrategy is going to go to like 10x NAV or whatever, which personally seems crazy to me because sales going to dilute the fuck out of you before I get there. And then secondly, like, I think it's such a lower barrier to entry to just be able to go to your brokerage account and buy MicroStrategy rather than to figure out Bitcoin.
Yeah.
But do you think unit bias has played a part in this as the sats man?
With a Bitcoin being too expensive?
Yeah, like people seeing it, and that's what they just think they've not got a 10x in there or whatever.
I mean, I think probably, yeah, partially. I mean, this is one of the reasons why I think sats should be the standard, and we should go to the full extreme and go to the lowest unit of Bitcoin. I mean, to those listening that don't know what sats are, there's 100 million sats in Bitcoin. They're little bits of Bitcoin.
But they're not bits.
They're not bits. 100 sats is a bit. Could be a little bit confusing, but the point is I think people shouldn't get caught up in the top level price of Bitcoin, but it's definitely real. The more interesting thing to me is the ETFs. So the ETFs all chose different units for the most part. It's really hard to understand like why IBIT is trading at one price and BitB is trading at a different price. But they all chose fractions of the Bitcoin. Completely arbitrary numbers.
And none of them chose sats.
Yeah, I mean, like I think you don't want your ETF to be a penny stock.
Yeah.
Right? So there's like a balancing act there. But they clearly were playing into unit bias and in how they chose which fraction. It's hard to figure out which fraction it is too. You have to like do the reverse math. I don't even know off the top of my head what those fractions are. And I mean, MSTR is a similar situation, right? Like it's the share price is way less than 1 Bitcoin. I would just say to people that no matter when you got into Bitcoin, you thought you were late. There's a meme that's not really a meme. There was a post in like 2011 on Bitcoin Talk, which was like one of the original Bitcoin forums. And they said, like, there was a guy complaining that he missed the boat in 2011, right? Like, I started getting active in Bitcoin in like 2013. I thought I missed the boat. Everyone thinks they're late. And I think the overwhelming majority of people, if they just focus on staying home and stacking sats, like this idea of just lowering your expenses and accumulating as much Bitcoin long-term, slow and steady, will outperform pretty much 99% of people that are trying to like actively trade. And I think it was Francis who said newcomers often think that leverage is a way to magically become an OG. And usually if you use leverage, it's the opposite. You're going to lose everything. And you just need to think long term. But back to the gold Bitcoin conversation. I mean, 2 days ago, gold went up an entire Bitcoin market cap. So just in the scheme of things, there's a lot of growth that can happen with Bitcoin. Most people haven't adopted it. Most capital allocators haven't allocated to it. And I think we're still pretty far from anyone being quote unquote late to Bitcoin. I think probably the turn is when most people are spending and receiving Bitcoin versus buying and selling Bitcoin is when that changes. And we're still pretty far away.
We're a long way from that. Yeah. I mean, I think there's not only did gold go up entire Bitcoin market cap. I saw a chart the other day, which was, like value of assets traded throughout the year, and Bitcoin's like less than 10% gold. Like there's a long way to go. I want to go back a little bit. So you were talking before, you said like many companies that follow this MicroStrategy thing. I've actually been surprised that it's been as few as it has been. Like there's not many that have done it at least the same degree as MicroStrategy. Like Metaplanet would be the obvious example, but they were tiny. They've done amazing, but they were very, very small. But now Gamestop's coming in, and I think this is actually really interesting because I think people have kind of faded the GameStop narrative from a sense of like, these people are so primed to be Bitcoins, the people that are into GameStop. Like the entire GameStop movement a few years ago was all about, right, fuck you, Wall Street. How big do you think that has the potential to be? And I also want you to tell me the thing you told me last night, because that's funny.
Well, I don't know if that's real or not.
I'll just say it anyway. With caveats who we don't know.
So GameStop is kind of a bittersweet one, right? Because I was rooting for the Wall Street bettors on the GameStop run when they were going after the shorts with Roaring Kitty and shit. What was it, like 2 years ago, 3 years ago. And then like the Wall Street cabal and Robinhood like turned off the buy button and they just fucked them. They like completely fucked them. And I was hoping that was going to be a wake up call for a lot of people. Where like Bitcoin legit fixes that. You can't turn off the buy button on Bitcoin. Like, Bitcoin's a 24/7, 365 global market. Yeah, you could turn off, maybe Strike gets pressure, maybe Coinbase gets pressure, you turn off the buy button there, but you can't turn off the global buy button on Bitcoin. You can't stop people from trading in P2P or using a different exchange or something like that. So Bitcoin legitimately fixes that. And we did get a bunch of people from that movement came over to Bitcoin after that. Some of them are even using Nostr, like they've gone full deep down the rabbit hole. But most of them we didn't get. So this seems like Act 2. And maybe this will get more of those people interested in Bitcoin. But it goes both ways. Like it also is kind of another distraction from them getting real Bitcoin and figuring out the skills, because Bitcoin is a paradigm shift in how you think about money and use money, and for sure. And so it takes some time to get comfortable with it. And so as a result, like the sooner people start getting comfortable with it, the more prepared they'd be if they actually really need Bitcoin. So I do think time is of the essence in terms of individuals learning the tools and learning how to use Bitcoin. So this could be a distraction to them.
Just one point. I do think, I understand what you're saying. I think you might be right. But at the same time, Roaring Kitty is like the demigod in these circles. And if he starts talking about Bitcoin,
I agree.
I think a lot of people are going to go down the rabbit hole.
I think it'll strictly be a net benefit. And it's cool to see Act 2 happening. I would say to people, like, I think when they first announced it, they had like $4 billion in cash. Then they did a convert. They took out a convertible note, the MicroStrategy, the strategy. And I think they raised another $1.5 billion. So they have like $5 billion in change in cash that they can put into Bitcoin. which is substantially higher than Strategy originally had. Like Strategy was tiny at the time. So it's definitely a bigger magnitude at start. And then what I was saying to you earlier was it's a heavily shorted stock. So someone online was saying, and Danny is putting me on the spot here, but I have not verified it. I don't really understand exactly how it works, but someone was saying, that if they couple Bitcoin purchases with a Bitcoin dividend, which no one's ever done. That's actually really fascinating to me. We see that in private markets, Bitcoin dividends, that the shorts would have to then buy Bitcoin for the dividends.
That would be,
which would then add Bitcoin buy pressure, which would then increase GameStop stock, which would then pressure the shorts more. And you kind of have this.
That's the real way to liquidate all the shorts.
You have this very aggressive self-fulfilling prophecy, which kind of sounds badass and exciting to me.
Yeah.
I don't know if it's true. And I don't really understand like the knock-on effects or how that plays out. I don't think anyone really does. But there's definitely something interesting there. I don't think you just fade it. I do think it goes with this trend of what we're seeing is mostly Bitcoin is being adopted in the public markets by failing businesses.
Yeah.
That have no other option. Like I saw Best Buy was floated because they have a bunch of cash. MetaPlanet was like a failed hotel business, is my understanding. MicroStrategy, that's an African tech company.
Yeah, that business is pretty inconsequential now.
The real game changer is when, to me, like, this is all a little, this is all slight variations on what has happened to Strategy already. The real game changer is when we start seeing hyper successful companies with large cash holdings start transitioning into Bitcoin. Companies like Apple
or Meta. I really thought Meta were going to be.
I wouldn't be surprised if Zuck is one of the first movers in that regard. They have a massive cash position. He's clearly interested in Bitcoin. I think one of his dogs is named
Go.
His goat's named Bitcoin.
Yeah.
He obviously has an axe to grind with the Winklevoss twins.
For sure.
And he has control over his business, right? That's another thing that you see with a lot of these companies, including Strategy, is that they have founder control so that they can move quickly. We're seeing that on the government side too, right? Like Bhutan or El Salvador can move way quicker than the US government.
Yeah.
Because they have very concentrated control. So I wouldn't be surprised if Meta moves. Look, we live in the best timeline. Like, I think like this timeline is absolutely crazy. I think if you go back even a year, particularly for American Bitcoiners, there was a lot of concern to be had, and there's still some concern, but we're trending in an amazing direction. If you go back 3 years, 4 years, 5 years, I think younger Matt would not be able to imagine how positive a situation we could be in at this current juncture. So it's important to realize that. And I'm kind of just, you got to kind of go with the flow. You're like riding down a river. You can't oversteer. You just don't sink.
Yeah. And we've been kind of talking about these things as if they pose risk to Bitcoin. And really everything we've gone through so far, I don't think is like a real existential.
I don't think so. I think they could be risks to individuals.
Yeah, I agree with that. But then the one thing that has become more and more of a talking point that potentially would be an actual risk to Bitcoin is quantum.
Yeah.
First of all, where do you stand on that whole thing? Do you think this is real and do you think it's going to happen?
Look, it's way above my pay grade. I will just say that people have been saying quantum is going to break Bitcoin since like the very early days of Bitcoin.
Yeah.
Like, it's something I've heard.
Or maybe it was true then.
I mean, Vitalik's original scam before Ethereum was a quantum-based mining company that was supposed to just like absolutely destroy Bitcoin proof of work and just mine all the Bitcoin.
I didn't actually know that.
That goes way back.
Yeah.
So I take all of this with a grain of salt whenever people say this. The second piece is quantum would break, like true quantum would break a lot of our existing financial system and security systems and how we do all digital based things, right? In terms of encryption. Now, the Bitcoin community has, as a result of being so adversarial, particularly the developer community, has been thinking about this for quite some time. And there's ways for us to do basically opt-in protections to protect Bitcoin holdings from some kind of quantum attack. Now, the question is like, what is the timeline? When does this actually become a threat? Is it 5 years? Is it 10 years? Is it 20 years? Does it never happen? That's a little bit harder to put your finger on. I was talking to someone about like someone that I deeply respect, an older individual, and we were talking about like the rise of LLMs and AI, and he was saying that in his many years of investment experience, if you're putting like potential future timelines on a dot plot and you're like plotting out where we potentially go because of the growth and improvement in LLMs, it's a wider possibility set than ever, for sure. And I think that probably adds to the question marks about what potential timeline we'll see with quantum. But the cool part about opt-in is we can do it on the sooner side and people can choose their own risk level.
Yeah, the interesting part of it to me is like if quantum became a thing in 5 years' time, I'll say this was a real thing that was a threat to Bitcoin. Like we already have BIP 360. I know it's not like a perfect bit by any means, but there's a way that we can actually on the proof addresses and you can make sure your coins aren't get stolen.
But it's opt-in. Like the person would have to then move to the new address format. And it would be more expensive for them.
Yes.
But they would have the assurance that if there was a quantum attack, other people's Bitcoin would get stolen.
But then the interesting part is like, especially with the changing dynamics of who Bitcoiners are, like strategy being a perfect example, BlackRock, these people, like, do you then choose to freeze everyone's funds who maybe have lost the keys or like Satoshi's funds or whoever? Like, do you choose to freeze them or just let them be stolen? And I think that's where the conversation gets quite interesting. Because to me, like, I think the only solution is you let them be stolen. But I'm almost certain that Saylor, who wants to like time lock his own Bitcoin indefinitely, would want to freeze those funds. And so then what happens?
So, I mean, this is a tricky one. Because, and Lopez wrote a really good article about this. I think his website is lop.net.
Yeah, it's.
And he was making the case for freezing the funds, it's his argument. Now, from my like base principles of free markets and permissionless technology, I lean towards just letting it play out because I don't know when you would decide to do it.
And what if someone was just choosing not to?
Now, but the key difference here is what I think a lot of people don't realize in this scenario is I gotta put this on. Yeah. I think some people think in that scenario, like different people would steal different people's Bitcoin.
Well, yeah, because
but that probably wouldn't be the case. What would probably happen is someone would secretly obtain the capability. And here's the thing. If that capability happened where you could break standard encryption, basically, if you could reverse engineer a private key from a public key, which is not possible right now, you could secretly spy on the world's encrypted communications. And nobody would know. And your advantage in that situation would be not to tell anybody. And it'd be hard for anyone to prove that you're able to do that without you telling them. You could break, the way encryption works for the traditional banking system, and nobody would know that you were doing it. Now, if you did it on Bitcoin and you started stealing Bitcoin, people would know really quickly. So your incentive would be to keep it quiet. And then when you go for it, steal a lot of Bitcoin. So you could end up in a situation where, I don't know, like how much hasn't moved into, like maybe it's 4 million Bitcoin, maybe it's 10 million Bitcoin, hasn't moved into the opt-in protected addresses. And in that situation, do we want a potentially malicious actor or one person or one entity to control that much Bitcoin? Could be a major issue. Now, I think probably if that were to happen, this is like major theoreticals, and it's not something that keeps me up at night.
It's just interesting to think it through.
Yeah, probably what you would see happen is you'd see two forks, right? So anyone can fork Bitcoin if they want to. This is a common misconception. Like me and you today can just your computer, we can
say 22 million Bitcoin.
Yeah, we can just change the consensus rules, and then all of a sudden we have the same historical record of Bitcoin, but then going forward it's two different paths. Now, even though everyone can fork Bitcoin, most people will not go along with your fork, right? Like me and you are like, we created new Bitcoin.
And we've got a million.
Yeah. No one's going to go along with that. That would be ridiculous. But in these types of situations, it's, as a free market proponent, is the last defense of Bitcoin. It's this beautiful free market mechanism. And so what you would see is in any kind of threatening situation to Bitcoin, chaotic threatening situation to Bitcoin, I think what you would see is effectively two chains emerge. And if you had Bitcoin at the time before that happened, you'd have equivalent amount of Bitcoin on both sides, and people would decide which way they wanted to go. Mm-hmm. And we saw this play out in 2017 with Bitcoin Cash versus Bitcoin. And Bitcoin Cash is effectively worthless now. But for a time it wasn't. They were trading against each other. And the market spoke, and the market clearly resoundingly said, we're not going to go along with the fork, and we're going to stay on the existing chain. And so what does that impact on someone who relies on Bitcoin? The impact is a short-term volatility, purchasing power impact. But at the end of the day, like, you could have slept through all of 2017 and not lost any money.
You don't actually have more money.
You'd have significantly more money today in terms of purchasing power. But even at the same amount of Bitcoin.
But even in terms, you'd also have, I know Bitcoin Cash isn't worth a lot, but you'd also have that on top of Bitcoin.
Right.
But the interesting part there is, so in 2017,
basically worthless.
Yeah, but it's you could stack a few more stats on
that.
In 2017, Bitfinex did that futures market, which I think was really cool. So they allowed the market to kind of vote on what they thought was going to be
ahead of time.
Yes. The interesting part, if this happened, assuming that, like, Saylor and BlackRock are on the side of freeze the funds because it would be in their interest.
Yeah.
That's not really a very free market to, like, decide on, because they have so much money they could play in the futures market. Right. Signal the wrong thing. And even though it's not a perfect analogy, it feels like a bit of a down moment for Bitcoin in that scenario.
I mean, it's a horrible analogy. Well, first of all, the future markets are interesting for taking temperature.
Yeah.
But it's similar to prediction markets leading up to an election or something like that.
Yes.
It's providing you a data point on how things might go, but it's not absolutely certain. And then the other piece is they are, effectively centralized and controlled, right? So in that instance, Bitfinex is the one that is managing that market, and you don't know if Bitfinex is playing games either. Mm-hmm. Right? Like, what if MicroStrategy has they launch a futures market, right? It's like, are the trades real? Like, you don't even know. The beauty of an actual fork war is that it's real on-chain signed assets that are moving back and forth that can't be faked. Now, the problem is there's no way to know for sure until after it happens. And it will be messy. And if one party has deeper pockets, they can make it messier in the short term. But I think long term, that party will probably get wrecked. And there's a game theory there where they might not be willing to risk that much, right? Like, in 2017, there were deep pockets on the Bitcoin Cash side. I think Roger Ver was a supporter. He owned Bitcoin.com. He had tons and tons of Bitcoin. And Gian was, the founder of Bitmain, and they made the majority of ASICs, and they had the majority of mining hash power. And even the hash power they didn't control, they were selling the ASICs too, so they kind of had control over there. And they tried to tip the scales, right? And they failed ultimately, to do that. In the short term, there was, I mean, I don't know if you remember, you go back on Twitter back in the day, and like, there was major players like Ryan Selkis, I'll just call out by name, who I guess is like now a Christian influencer, not a Bitcoin. I don't know, it's weird. But he was like, Ethereum is way more certain than the future of Bitcoin. You know, there's so much uncertainty here. Bitcoin Cash could probably win. Coinbase was pro Bitcoin Cash for a bit there. You know, one of the largest entities in the industry at the time. And they failed. Mm-hmm. And a lot of it also was, I think, not only was it market participants, you know, expressing their interest through selling Bitcoin Cash for Bitcoin. But I think it also was they didn't fully tip the scales, right? Like, I think there is, like, Jihan never, for instance, moved the majority of his hash rate to Bitcoin Cash. And why didn't he? But the reason he didn't do that was because he didn't want to destroy everything. You don't want to kill his golden goose. You know, regardless of the perception of the individual perception of sailors' motives or intent, at the end of the day, his company controls 500,000 Bitcoin. If that ever became worthless, he's nothing. Yeah. He's absolutely nothing. He has skin in the game. And the last piece I would just add here is the coolest part about Bitcoin is if you own more Bitcoin, you don't have more direct control over changing Bitcoin. You have that market dynamic where you could crash the price, right? You could sell. Mm-hmm. But besides that, you don't have more control. If you have more shares of a company, you have more voting control over that company. That's not how Bitcoin works. Yeah. That's fundamentally different. That's hard for people to wrap their heads around.
This episode is also brought to you by Ledger. If you're serious about protecting your Bitcoin, Ledger has the solution you need. Their hardware wallets give you complete control over your private keys, ensuring that your Bitcoin stays safe from hacks, phishing, and malware. With Ledger's easy-to-use devices and the Ledger Live app, managing your Bitcoin has never been more convenient. Whether you're a long-time holder or new to the world of Bitcoin, Ledger makes it simple to keep your assets protected. If you want to find out more, visit ledger.com and secure your Bitcoin today. That's ledger.com. This episode is brought to you by Casa, the leading Bitcoin self-custody solution. I've been using Casa since 2019 and I can't recommend them enough. Casa have options for all Bitcoiners, from a 2 of 3 multisig to a 3 of 5 and a private client option for absolute best-in-class security. Casa also do inheritance, which I very recently set up, and it really couldn't be easier. My inheritance plan has gone from a vague treasure map for my wife to a rock-solid security plan that I have total confidence in. To find out more about Casa, go to casa.io, which is casa.io.
It's funny as well that after 2017, how few people actually came back from being on like the Bcash side of that argument. Yeah. There's obviously some, like Wences was one of them. Marshall Long, who I really, really like, he was on the wrong side of that and ended up coming back.
BitGo.
Yeah. But I want to move on from this. But
kind of Brian Armstrong.
Kind of. Before we move on from this, though, I want to know why you think the DAO hack analogy is a horrible analogy. Because to me, it seems like relatively similar.
So why don't you explain to the new listeners what the DAO hack was?
I will try my best. So in 2016, Ethereum had a bug which meant this DAO like basically took control of a ton of Bitcoin. They didn't break, a ton of Ethereum. They didn't break consensus rules, and so Ethereum modified the chain to reissue that Ethereum to all the people that write for the quote unquote had it.
Okay, so the DAO. Ethereum, all the major Ethereum stakeholders and promoters that were heavily involved in the pre-mine and that controlled a large portion of the Ethereum supply were promoting this concept of a decentralized autonomous organization that was going to invest in things. Yeah. And a bunch of the Ethereum supply got pushed into this smart contract that then got compromised. Yeah. And they all lost a lot of their Ethereum to the hacker. And at that point, they forked the chain and created a new chain that is now known as Ethereum, that returned all that money to the previous holders. The existing chain continued as Ethereum Classic and basically lost against the market. Yeah. I think it'd be very hard for a Bitcoin fork that changed the history.
No, guys. So I don't mean that it changes the history, but what I mean is if
basically what it did.
In Ethereum for sure did that, but with Bitcoin in this analogy, like if half the people, however many people want to change it so that all those coins.
Oh, with the quantum stuff.
Yeah, with the quantum stuff, if all of those coins are now frozen essentially, how is that not the same? You're just preempting a hacker stealing the coins.
I think probably what matters is, it just matters what the threshold, like how much Bitcoin is at risk versus how much Bitcoin is in the new opt-in addresses. So with the DAO, like it was a large portion of major stakeholders' funds.
Yeah.
Percentage-wise. I mean, and it was also easier. They kind of pulled a fast one. It was like kind of easy. There was less stakeholders involved, very concentrated community. Most people weren't paying attention. It was a very different time. I don't know. I can see the similarities as an analogy. Maybe I was wrong to say it. Absolutely not as an analogy.
I'll say that.
But what people don't realize is that Bitcoin is incredibly hard to change by default, and that's actually like the fundamental feature of the value prop.
For sure.
While Ethereum at the time was incredibly easy to change.
Because I have Vitalik and Joe Lubin on
Yeah.
people. Yeah.
There was like a group of 10.
Yeah. All right, let's move on from that. I want to talk a bit about Nostr. But before we talk about Nostr, let's talk about X a little bit.
Wait, just real quick, just going back to DAO thing. There's a famous screenshot of Vitalik saying, pause all trading on exchanges in the IRC chat.
Huh.
Like, I can't imagine that scenario happening in Bitcoin today.
No.
Where all exchanges just stop trading and then switch assets.
Yeah, no, that wouldn't happen.
And he was able to do that for like 90% of the volume, like that.
Yeah. It's more the dynamics of it rather than how it
Yeah,
actually plays.
I agree.
But so I want to talk about Nostr, but
Yeah, I interrupted you.
so that's okay. But I first want your opinion on X, because you were super critical of Elon when he came in to over X. How do you think he has done now, like 3.5 years on where we are?
I mean, I think he's crushing it. I think the market obviously thinks he's crushing it and agrees with his decisions. It seems like X is having its moment. I think it's hard to verify, but it seems like it's having more activity than it's ever had before. My general concerns still exist, which is global communication is too important to have centralized control over.
Mm-hmm.
And it doesn't matter if you think the controller is benevolent or not. The fact that there is a controller is the problem itself. I think that there are a lot of issues simmering under the surface. I mean, we've seen widespread censorship in Turkey, for instance. We've seen censorship in Brazil. Even though Elon claimed that he was going to fight for the people, he ultimately complied with all the government demands. We've seen a significant amount of censorship in India, in compliance with Modi. It's important to realize, like, these are large markets. And Elon has multiple business interests that he wants to have access to and succeed there. He wants Starlink access. He wants to be able to sell Teslas. And we also saw there was like a mini censorship crisis when, what was it exactly about? But Elon started going after a subset of the political right.
Mm-hmm.
I think it was over the H-1B visas.
Oh, okay.
The immigration visa. Yeah. And so like you're seeing these simmerings, and like the thing is, like, at the end of the day, having a single individual or entity in control over speech should be a concern. And as a society, we should be trying to improve that status quo. And we've never really had a reasonable alternative to that before Nostr existed. So I have been continuing to focus much of my time on Nostr. The other piece there is not just censorship, but it's also the verifiability of information and the spread of like fake manipulated news. There's no way for you to verify what is happening on X. If a tweet goes out by the Prime Minister of the UK, I don't know if the Prime Minister of the UK actually sent that, if it's been changed. If you see a screenshot, there's no way to verify that that was real.
Mm-hmm.
I think as we start to see the growth and iteration of AI, that's going to become even more of an issue. And Nostr has everything signed by default, which allows you to verify that something was posted by someone and then hasn't been changed since then without trusting anybody, which I think is going to become more and more important. But yeah, I mean, look, I am not your typical, I by no means have Elon derangement syndrome. A part of my concern is that I have so much respect for his ability to execute.
Yeah.
That it's more of a concern than if he was incompetent. So it's kind of the opposite of your classic, Elon's an evil idiot.
Yeah. It's interesting because one of the things that you were always really vocal about was like the KYC side of blue checks. I've actually been surprised that that's not got worse. In the sense that I wouldn't have been shocked to be sat here today being like NIMS are no longer allowed on X. And you have to have like...
No, he's fine with NIMS. See, he's very savvy, right? So like you can have a NIM, but he's going to know who you are. You have to trust him to protect your privacy.
Through a phone number, rather than like...
Well, right now it's just phone number based. Unless you're getting the payoffs, which I think we haven't really seen. We've started to see like a really negative knock-on effects of paying.
I just know
portion of the ad revenue.
How do the payouts work? Do you have to have like photo ID?
Yeah, you do like full KYC with Stripe to get paid out.
Okay.
So everyone who's getting paid out is like bagged and tagged. So we've seen that get worse. I mean, I think part of it is he's a bit distracted. Or have you not been recording? Am I recording now?
You are now recording. I just did the most schoolboy error. We recorded for an hour and 20 minutes without audio on Matt. So I'm very sorry, Matt. I'm sorry to the listeners. I fucked up.
It's okay. I mean, it happens to the best of us. It's happened to me before.
Do you want to tell a story of when it happened to you before that you're just telling me?
It's happened to us many times, but when Jack Mallers launched Strike, he came to Brooklyn to launch it on our podcast, Rabbit Hole Recap. Since Danny fucked this up, I won't feel bad about shilling the podcast. Search Rabbit Hole Recap in your favorite podcast and click subscribe. And he launched Strike on the show, and we didn't record the first 40 minutes, so we had to retry to record it. And it always comes out worse.
Yeah. We were just talking before we clicked record again, and I actually clicked record this time, about whether we should try and go back and do the whole hour 20, but you can never recapture it.
Yeah. Danny's just going to try and do his best and salvage the audio from the camera audio.
So it's going to sound shit, but now it will sound good. So I forget where we were. We were talking about Elon.
Yeah, Elon wouldn't have fucked that up.
No, he wouldn't. I need a Danny. If anyone wants to be an intern on What Bitcoin Did, please email me at danny@whatbitcoindid.com.
Yeah, you need a producer. I feel your pain because my other show, Citadel Dispatch, I've always just produced myself. So we've had bad audio quality, good audio quality, missed audio. It happens to the best of us. But anyway, my general thesis is that the identity and control and surveillance of centralized systems, whether that's money or speech or everything else, will trend worse over time. And the way we solve that is by building alternatives that don't have centralized control, that can't be corrupted by humans inherently. And I think Nostr shows a lot of promise for that in terms of identity and communications. And Bitcoin shows incredible promise in terms of money. You mix the two together, They're incredibly complementary and very powerful. And I would just say that in all my years, there's basically been 3 projects that I've seen massive organic developer interest. And that has been Bitcoin, Nostr, and Cashew. And that definitely has not changed.
So that's almost like a report card on X for the last 2 years. When we first spoke about Nostr on the show, which was a pretty long time ago, you were super bullish on Nostr. I know you're still very bullish on Nostr. Do you think, has it performed how you expected it to?
I mean, to our earlier conversation, depending on how good the quality comes out, fighting network effects is a bitch. And it's going to be a long grind. Look, I think most people will not use Nostr because of censorship resistance or verifiability. Those will be side effects that they get as a result. It needs to be a convenient, usable, positive experience. And that's going to take longer than most people realize. And the grind is real, but I think it's a worthy grind. Because of more and more of our lives are digital, it's more and more important that the systems we rely on are robust and corruption resistant.
Yeah. I think the interesting thing there is like when Twitter, did it ban Brazil for a little bit?
So like the Brazil example is a perfect case study because it shows the vulnerabilities of centralized systems and it shows the savviness of Elon in terms of messaging and communication. So the Brazilian government wanted to stifle the voices of opposition in Brazil. So they went to Elon and they said, okay, ban these accounts. And he's like, no, I'm not going to ban these accounts. So then they seized his bank accounts and including any bank accounts he had in the country and blocked X on the app stores in the country. So they went to Apple, another centralized party, and they went to Google, another centralized party. They said, you can't have it on the app stores. They seized bank accounts, another centralized parties, both Starlink and X in the country. And they passed a law that said, if we catch you posting, so like if you use a VPN or something and it's your real name account, right? Like major opposition voice, if you post on this platform, we'll also arrest you and fine you. So they made it illegal. So Elon responded by saying, okay, I'm not going to comply. He had no way of billing people for Starlink, so they couldn't pay him. So that's where Bitcoin can come in, by the way. But there was no way for him to accept payment. So he said anyone who was using Starlink in the country could use it for free. And they had a very public, loud fight. And then ultimately, and a bunch of people were like, Elon's our savior. He's here to save us. He's going to protect freedom of speech around the entire world. And then he quietly complied and came back to the App Store. He got his bank accounts back. And he ended up complying with the request to block those accounts.
Always the way. But when that happened, did you see a lot of people from Brazil move across to Nostr?
Not as many as you'd expect. First of all, there were other alternatives. Like it didn't go full extreme.
Blue Sky and all that kind of stuff.
Yeah, or even like TikTok.
Yeah.
Or Threads.
Does anyone use Threads?
I mean, look, Facebook is the juggernaut. Like, I think it's important not to get too caught up on Elon. I use Elon as an example because first of all, the only social network I ever had in my life for the last 10 years was Twitter. Like, I deleted all social. I had no Facebook, no Instagram, no Snapchat, no TikTok, no LinkedIn. And I was just using Twitter and then X. And I was mostly using it just to talk about Bitcoin. Like I wasn't using it to share baby photos or other things that social media people use. So I had a very direct connection with that platform, but also Elon himself represents the most positive freedom of speech tech CEO that we have. It's a low bar, but in that regard, he does the best out of anyone. It's just like very obvious. But Zuckerberg is is big boss man. The only thing that limits Facebook user growth, Meta user growth across WhatsApp, Instagram, and Facebook is birth rate. Like they need more children to be born because they're at like 5 billion people or something. The internet connected population is estimated at like 5.5 billion, and Meta's user base is like 5 billion.
That's insane.
So they're the real big boss. So yeah, I assume people use Threads. I've never used it, but I assume people use Threads. I assume people use Instagram. It's important to realize that it's impossible for us to verify those user numbers when these centralized platforms say how many users they have. You just completely take them at face value.
Mm-hmm.
But if you ballpark that he's not completely lying, they're by far the highest. So if Facebook's at 5 billion, I think TikTok is at 1.8 billion. I don't remember like the WeChat Chinese numbers off the top of my head, but X is at like 600 million. It's like 5 billion versus 600 million. It's completely different scale. And I think Nostr can provide a better path for all of those users. So yeah, I don't really know where I was at, but the point is like, I think, I think these things are too important to rely on the status quo. And just because that's the way that we did things when the internet first got created doesn't mean there isn't a better path. And I think it's important for our children, our children's children, the future of society, that we have more systems that are corruption resistant. And Nostr represents that, and Bitcoin represents that.
Yeah, I mean, I think Nostr is really cool. It's obviously more than just social media. Like social media is where it's found its initial like product market fit. But like the weird thing I have with it is I want less social media, not more. So I've never actually used Nostr that much. Is there other stuff being built that's actually looking promising?
Look, I mean, I sympathize with that. Like I said, my only social was Twitter and then X, and now my only social is Nostr. And I do think one of the biggest concerns I have as a new father is social media, digital connectiveness, addiction with my kids. Mm-hmm. And it's something that it's going to be it's going to be a challenge to have them not be disconnected from society, but also use tools in a healthy way. And I think that's something that the entire Nostr ecosystem struggles with. I think because it's weird, we're like a social comms identity protocol that's being bootstrapped by people that are mostly skeptical of social, which is unique. I think that argument is completely valid if you don't use any other social, but most of the time I hear that argument from people that are like tweeting like 20, 40 times a day and just scroll. So I think it's like a little bit of a cop-out.
Yeah.
But I do agree that it's hard to focus on multiple platforms. Like Nostr is not a platform, it's a protocol by design. But usually when you see people successfully leveraging these things, they like focus on just one, which I respect, and the network effect is there with X, so I understand why people don't do it. I do think Bitcoiners specifically should have a stronger incentive to use Nostr and try and improve the ecosystem, just because of our earlier conversation that was in poor quality. That like if someone is coming into Bitcoin for the first time through an ETF or MSTR, it's a completely different scenario than if they come in through Primal and are getting paid sats for shit posts. Like if the first time you ever interact with Bitcoin is someone enjoying your content and sending you Bitcoin, whole different perspective and journey that user has. And if you want users to use Bitcoin in a more freedom-oriented way, that path is the most effective. And even Nostr in its infancy right now is by far the largest Bitcoin circular economy in the world. And it's growing quite fast because it's digital.
Yeah, I like, just to one of your earlier points there, I struggle with Nostr in the sense, like, I don't use Twitter very much. Like I use it because it's like a good news feed.
Right.
And then in terms of actually posting, I post the shows, and then every now and again I'll post a tweet. I started off posting the shows to Nostr, and I've actually not been doing it as much because it feels like the wrong place to do it. Like when I go out and like just post a video, like promote the show, it feels like that's not what Nostr's about. Do you know what I mean?
No, I think it's just right now it's a different audience. I mean, I think the audience is more is less mainstream and more.
It feels like I'm
tech-focused.
promoting a show in like a group chat, and that doesn't sit quite right.
I mean, I would probably, at its current state, I would compare it to like a newsletter.
Yeah.
So like your newsletter is like your most ride or die dedicated audience, right? Like they subscribe and want to know every time you post something. But you're not going to get any new people from a newsletter because they're not already subscribed. And that is going to change as Nostr adoption increases. But I like to kind of think of it at this point as like many newsletters that are compounding on top of each other, because it's my newsletter and your newsletter and Pablo's newsletter, and they're all in the same interoperable format.
Mm-hmm.
And so audiences of each can spill over to each other. I will say, Rabbit Hole Recap, which we've been doing for 7 years and has been largely Twitter and then X focused, gets posted to both, and we get more real comments and engagement on Nostr already today. Like we'll get retweets and stuff on X, but like actual commentary on if they enjoyed the conversation or
you
what
bully
they
all the
had
live
issues.
streamers to go to the Nostr one. That's why.
I mean, yeah, I'm insistent about it, but like that's also not something that is rare, right? I mean, the people that are most successful on YouTube are the people that are saying like and subscribe. As much as I hate it, it's like and subscribe and press the thumbs up button.
Yeah, do all those things, by the way.
Yeah, exactly. So why is that any different than being like, oh, if you want to interact with the show, you should download Primal and interact with the show over there, and if it's interesting, we'll zap you, and you can zap us and send us Bitcoin. We'll send you Bitcoin. But it's actually it's real hard, and so then you do the math, right? And so the cool thing about Nostr is because it's an open protocol, everyone can make their own estimates on what the active user base is, right? While with something like Telegram or X, you have to just trust what the centralized provider says. So if X's public numbers are, let's give them the high end of 700 million, which I think was like 650 or something was the last public number I saw. 700 million active users of X. And then Nostr is probably not more than 100,000 users, active users. It is kind of fascinating if we did Rabbit Hole Recap yesterday. Last time I checked, there was retweets, but there was no actual comments on the Rabbit Hole Recap on X. But on Nostr, there was like 12. Like that's a pretty interesting disconnect. If it's 100,000 users versus 700 million.
Yeah, totally. That's interesting.
So my point is at this point, look, if Nostr is successful, just like if Bitcoin's successful, then nearly everyone in the world will be using it. But in the meantime, I think from someone who creates shows and creates content perspective, the way you should look at it is these are like your most dedicated ride or die audience members. And then the mainstream is on YouTube or X or TikTok or whatever.
Yeah. All right. Well,
are you on TikTok?
No, am I fuck?
Well, so you're missing out on 1.8 billion users.
Yeah. I'm happy to take that loss there. But if so I'll post this show there.
Do you post on Instagram or Facebook? Or
I don't have Instagram or Facebook.
You're missing out 5 billion users.
No, I've not had anything apart from Twitter for a long time. And at some point, I would love to get rid of every social media.
Yeah, same.
But you kind of missed the question there. I don't think it was intentional. But so obviously with OpenSats, you do tons of Nostr grants. Like what else is being built on Nostr that's interesting?
So I think there's a disconnect where people are say, I'm interested in Nostr, but not the social aspects. I'm interested in the other things, right? So Nostr is an open protocol and stands for notes and other stuff transmitted by relays. Like most things named by nerds, it wasn't necessarily the best name. I love Fiat Jaff, the original creator of the protocol. Kind of a weak name, but that's what it stands for. And so the idea is that you have
you can have infinite cryptographic identities, public key, private key pair. And then you can broadcast to the world any different thing you want to. We call them events, and they're signed. So you know that identity did this thing or said this thing. It hasn't been changed, and you can verify that without trusting anybody. And the good apps will just verify that for you, and then you can do manual verification if you want to. So all this is happening in the background, so people don't really realize what's going on. And the key aspect there is that you can make as many identities as you want without permission. Go out and try and make multiple X accounts. It's very difficult.
Yeah.
Like they make it very difficult for you. You need like a fresh phone number for each one. It's like a whole thing. And that's just the current state where it currently is. So the dream of something like Nostr is maybe you're using an app like Primal or you're using an app like Amethyst, which is like a social feed, and then you're able to switch to a different app that's in the same ecosystem, use the same identity, use the same people, you know, your social graph, the same people you follow, the same people that follow you, and move it across apps. And the example I always like to use is something like Airbnb. So I've used Airbnb for years. I have a really good reputation on Airbnb as a guest. It'd be nice if I could use that reputation in other places.
Mm-hmm.
And I can't because Airbnb locks that down. It's their proprietary asset, right? Is that trust, that verifiable reputation that's happening. They don't want a competitor to launch it. So people, you know, our nascent Nostr think voice space will be like, all of these things are going to be on Nostr. But then you look and you're like, they're not there yet. So I'm kind of long-winded. But my point is that people say the social, they're not interested in the social, they're interested in the other stuff. The social is the bootstrapping mechanism. It has the largest addressable market. As we said earlier, nearly the entire internet connected population is using Facebook. People are addicted to social. They use social every day. It's viral in nature because it's inherently social and you want to interact with friends and bring other people in. And so as far as I'm concerned, there's an order of operations. Is first we see the social happen. And that's not just a Twitter-like experience, which is what we see with Primal and Amethyst, but it's also like an Instagram-like experience. Like there's an app called Olas that is purely focused on an Instagram-like experience. There will be Reddit clients, and all these different things compound on each other. But I think it starts with social. So with all that said, early days start with social. We are seeing some nascent projects that are in the other stuff realm. And the best example I like is Zapstore,
Mm-hmm.
which is trying to solve the App Store issue we have. And the App Store centralization issue we have is that the overwhelming majority of the population relies on either the Google Play Store or the iOS App Store. And those are centralized walled gardens that are permissioned. And if you ask any developer trying to deal with Apple and Apple's approval process and paying Apple 30% or whatever of the cut of revenue, it's a pain in the ass. It's really difficult. Apps get banned all the time. We were just talking about the Brazil situation where they targeted the app stores. They wanted X removed from the app stores. So the app stores are a centralization problem, but they solve a very real problem. And the real problem they solve is twofold: is discovery. Which app do I want to download? I need an app to book a hotel room. Where do you go? You go to the app store, you search hotels, and you try and figure out which app you want to download. And you see reviews and whatnot on if that app is good, does it have 5 stars or whatnot. And the second piece, just real quick, the second piece is, am I downloading the real app? So if I want to download the Airbnb app, I want to make sure I'm not downloading a malicious Airbnb app. And the way they solve that is Apple is basically attesting that this is the real Airbnb app. This is not a scam Airbnb app. Google does the same thing. The problem is it has trust and centralization that does that. So Zapstore tries to solve both of those problems for you in a permissionless way, using the Nostr identity system, using the Nostr verifiable reputation system, where a developer can go release their app without permission, sign it with their Nostr identity, say, this is my real app. And then people that you follow can tell you reviews, and then can also tell you, I also trust the person who signed this app.
I think on the social graph side of the App Store, one of the really interesting things that's like Bitcoin specific is if you follow a bunch of Bitcoiners on Nostr and you go, like, I assume what most people who are new to Bitcoin, if they want to download a Bitcoin wallet, they'll just type in Bitcoin wallet in the App Store. And then like number one is probably like Trust Wallet or
it's
something
all
like
shitty
that.
wallets. Yeah.
And so if you then have the social graph attached to that and you know what other people are using, that's a cool way of actually finding signal amongst the noise.
Yeah. It's like, which Bitcoin wallet does Odell and these other Bitcoiners I respect recommend the most?
Exactly. That's very cool. I think one of my favorite examples of someone using Nostr it's obviously still using like the social side of it, but in a slightly different way is Fountain. I really like what they've done. And then on top of that, I think the other cool thing that's come out of Nostr is I think it's also helping bootstrap eCash.
Yeah. So what is Fountain? Why don't you explain to your listeners?
So Fountain's a podcast app where you can like pay the podcast creator. You can just zap them.
Right, you can send Bitcoin if you enjoy the show.
But they've also brought in now like the Nostr feed, so you can see what people are listening to, what people are zapping. So it's just like a nice mix of two.
And the coolest part is if you comment in the Fountain podcast app and say, I really enjoyed the show, except Danny really messed up the audio, that goes out to every Nostr app. And so then if I'm in Primal, I see that post and then I can press repost on that and I can comment on it and I can then send it out. And all of a sudden you start to see how things are compounding on top of each other.
Yeah. So that's very cool. I love what those guys are doing. But Matt, why don't you explain how like eCash is kind of playing into the Nostr ecosystem as well?
So eCash is another open protocol that allows, from a developer point of view, is a programmable, interoperable way to do Bitcoin banks and Bitcoin custodial wallets. From a user-focused way, it's a way to easily send and receive Bitcoin that is cheap, fast, and private, and offline. Can be offline if you want it to be. And the main trade-off is that you have to trust a custodian. But the cool part is because it's an interoperable protocol, you can load a Cashew app up. Maybe you like a certain Cashew wallet the best, and then you can choose which mint, which is your custodian, is on the back end. So it breaks the conventional knot between a custodian and an app. So like right now, like if you use Strike, for instance, you have to use Strike as your custodian. But if you use a Cashew wallet, you can choose which custodian is on the back end. So it separates the front end developer from the back end custodian, which I think is really powerful and will result in better competition between these custodians. But yeah, it's just an easy way to send Bitcoin with the trade-off that it requires some trust.
I think there's the cool element of it as well. Like if you're new to Nostr and you know nothing about Bitcoin, like I think there's UX that needs to be done on this. But if you could receive like both online and offline payments, it's in a custodian, but there's like trade-offs there. It's better than trusting like a single Coinbase or whoever. And you have privacy. That seems like such a great entryway for people coming into Bitcoin.
It's the first time we've seen in Bitcoin that the cheapest, easiest way to use Bitcoin is also private.
Yeah. And like what's been really interesting to me is like a few years ago, whenever this really started like getting traction, it was very much like Fedimint was seen as like the one that was going to be the biggest.
Right.
And there's obviously been complications with that. And now Cashew seems like I basically think everything Cali touches at the moment is turning to gold. Do you think for something like this, the trade-off of it being slightly more centralized is actually just going to like mean that the UX is easier and that's going to be the winner?
Yeah. So Fedimint and Cashew are both charming eCash protocols. So at the base level, they're capable of similar things and they're based on the same principles. The major difference is with Fedimint, instead of having a single custodian, you have a multi-sig custodian effectively. So it's like me, you, and Ben are managing a mint, and two of the three of us would need to come together to steal the money. So Fedimint is strictly better from a trust perspective. But that multi-sig aspect, that federation aspect, makes it much more complicated. And so it's innovating much slower. So Cashew's moving a lot faster. I think it's still early days. I wouldn't be surprised if we still see widespread Fetterman usage. I don't think it's an either or kind of thing. But Cashew has definitely seen faster organic growth, way easier to implement because you don't have to deal with that federated aspect. One last piece I would add is that's another piece that we're seeing with the other stuff of Nostr from a Bitcoin perspective is, so like I follow nearly 1,800 accounts on Nostr. If I load up a Bitcoin wallet or Cashew wallet that is Nostr compatible, it means that even though I just downloaded that wallet today, I can easily send Bitcoin to those 1,800 people without re-bootstrapping a network effect, right? And then all of a sudden you start to see like freedom-focused Venmo or PayPal that's interoperable and open. This whole idea of just permissionless innovation, of just open protocols that are not controlled, whether that's Cashew, Nostr, or Bitcoin, starts to get really fascinating in this whole vibe coding renaissance we're having, where people are leveraging LLMs to develop easier because you don't need open API. You don't need APIs. They're basically open APIs for the world. I don't have to go ask, if I'm going to build an app, I don't have to ask X permission to get your follower chart or your tweets. I don't have to ask banks permission in order to send money. You can mix all those pieces together and you can quickly and easily iterate apps without asking anybody for permission or trust, which is quite fascinating. And I think will start to compound in a real way very quickly. It's just, everything just takes time.
This is almost like full circle to, we started off with what's happening in terms of freedom money. I think this is the freedom money side of Bitcoin. Yes. It's been very cool. I almost feel like we need more to talk about because we've only got 20 minutes of actual good audio.
The good quality audio. If you look at where the internet is trending, or like the popular big tech web apps, is they're trending to this walled garden, this siloed system. It's very hard to, for instance, to browse X or Instagram or LinkedIn or Reddit, if not impossible, without an account now. And you don't have this open database, this open nature that the internet was originally built on, right? Like one of the coolest parts about Twitter in its early days was like, I knew it didn't matter who you were in the world. If you didn't have an account, you could still view my stuff. And that's just not the case anymore.
Mm-hmm.
So I think as we start to like enter this next chapter, this idea of just open, interoperable databases, protocols, doesn't have do not disturb enabled, becomes even more important. And I think people are going to start to see that value and they'll build it out. And I think that you have two different pieces here, and we haven't really talked about what I've been focusing on, which is trying to use money to hypercharge it and speed it up. And I do that from two sides. I do that from the OpenSats side, which is a 501c3 charity that is, we take no cut of donations. It runs on a full Bitcoin standard, and we send out open source grants every month. We're sending out to 40 plus countries. And those people are working on mostly non-monetizable open source protocols and projects that are like the base layer. And then 1031, which is, we started in venture, but we're just a capital allocator now at this point to the Bitcoin and broader freedom tech space. I think sometimes people think that there is a almost like a rivalry between those two kind of concepts, like monetizable projects versus open source non-monetizable projects. And you can have open source monetizable projects as well. But I think if you look at the internet and you think about the internet, you have two open protocols. You have the internet as an open protocol, but then you also have email, which is an open protocol. And if you look at both email and the internet, they were heavily bootstrapped and scaled up by for-profit businesses. And capitalism is a beautiful thing. So I think you need both. And I think if you think about it, if these protocols are successful, some of the most profitable businesses in the world will be Bitcoin Nostr businesses and Cashy businesses. The hard part is figuring out where those winners will lie and how that value is captured. But it just goes to reason that you will see very, very profitable businesses that are built on these open protocols and expand them.
I love that. Last important question. It's Good Friday.
Good Friday. Happy Good Friday.
Lent is nearly up. Is all caps Odell coming back?
Well, I gave up caps and punctuation for Lent, so we'll see what happens.
It's got to come back.
This will happen after
You have
Easter.
to speak clearly.
This will be post-Easter.
Yeah, this will go out on Monday or Tuesday.
Yeah, I mean, people are just going to have to wait and see what happens on that front. People so just for the listeners that might not be aware, I like to post in caps. I think it's a interesting exercise in being concise, and I say speaking clearly, and also you actually really think about what you're going to post. I will say that people take it the wrong way and think it's very aggressive, and there's a lot of anti-caps rhetoric out there. So it was hard to give up, but it's been a bit of a change is good, and it was a nice change of pace to post in all lowercase for the last month or so.
The first hour 20 of this was in lowercase, and then it's been on all caps. Yeah.
I'm surprised. Like, I thought one of the first, I'm surprised more Nostr apps don't let the user choose how they view posts. Like, a Nostr app could presumably switch everything to lowercase if they wanted to.
Yeah, but it hits different if everything's all caps.
That could have been a great way for people to monetize Nostr apps early on, is you could offer a premium feature that lowercase is free. But no one did that. I don't know. It's fun. People should just have fun with it. Life's too short not to have fun.
Yeah. Well, I appreciate you, Odell. Thank you. Thank you for letting me stay.
And thank you for coming. It's always a pleasure. And thank you for having me on the show. And I no hard feelings on the audio. It happens to the best of us.
Well, I don't think the listeners will share that, but we'll see. Thank you, mate.
Cheers.